Well, thanks for coming.
Yeah, I was going to say a few odd ones out. Thank you.
Tell me if it was at all interesting at the end of the conversation.
So big tech have really set the bar quite high. They've got the high quality experiences. They've been at this for a long time. So in your opinion, Jeff, how does the adoption of AI-driven customer experience in finance compare to these guys?
Well, obviously in finance, the biggest problem we have is we have 100 years of legacy technology debt that you have to overcome. And in our space, my experience in talking to my colleagues around the industry, bringing the data into a consistent data repository is the single biggest challenge. It's not your ML ops. It's not your whether you pick AWS or Azure. I mean, truthfully, these algorithms that cost $3 million 5 years ago are free. And the challenge, I think, that firms like ours and many of yours probably is, do you have a consistent, high quality, available data warehouse that allows your organization to target? And if you're a new company with no legacy debt, you just build it from the beginning, right? And you build it the right way. And in financial services, we didn't have a luxury. So I think for those firms that are able to do the former thing, and I would argue that's the single biggest problem that exists. And if you can solve that problem, then there's millions of examples of tech solutions in the industry that we can just rip off and we can leverage. In our algorithm model, we'll talk about it in a little bit. I mean, we're using the most sophisticated neural nets that exist in the world today. We didn't build them. Some tech company did. And I think one other comment I'll make is our chief economist was talking about this the other day, and what she was saying is that the first tech revolution really benefited Amazon and Netflix and all these other big technologies because they were able to go to market very quickly with really disruptive technologies that radically reshaped how we live, like Uber and Airbnb and et cetera. And what her hypothesis is that the second wave of technology is going to be firms like us, right, that are now consuming this technology to drive value for their customers. And her hypothesis is that putting aside any recessionary pressures, that the outlook for our society as a whole from a stock perspective is actually a quite good one, because most of our firms have not really, we're still in that the low stage of the hockey stick. What are your thoughts?
Yeah, so again, thinking about this from the customer experience, thinking about this from the business perspective, I think it's a bit of an unfair comparison. And the reason I say that is no one in this room, unless you're about to close on a house, woke up this morning saying, I can't wait to speak to my bank today. It's just reality. And I think sometimes if we work in this industry, we have to take a step back and remember that. Usually when we engage with a customer, we have to solve their problem first and foremost. It's a very emotional subject, finance. It is your money, it is your experience, it is what you're trying to do. So I always like to say that. No one woke up this morning thinking, I can't wait to speak to my bank. So when we do interact with them, when we do talk about personalization, when we are thinking about how can we drive that customer experience, that is a challenge when we're being compared to big tech, big companies. I also think there's instances, and it gets thrown around a lot internally, where we are challenged to be similar to those companies. And I like to say, I still get Daniel Steele book recommendations from buying my mum a book 3 years ago. So to say that we are not as good as them in certain instances, and that they are so far advanced when it comes to customer experience, I just think it's not always true. Like, we have the data. We are very lucky in the financial services with the amount of data and access we have about a customer to provide great insights, to provide great support, and really drive that customer experience. So again, from a business perspective, take a step back and say, what am I actually trying to solve for the customer? I think our other challenge is to get away from solicitation, from what do I want to speak to the customer about? What do I as a company, what do I as a business want to speak to the customer about, versus what does a customer need to know? What does a customer need to hear? I think that's where we can use AI at scale, that's where we can use technology at scale to really drive that good interaction and drive that experience with our customers.
Do you want me to ask you the second question? Hi, I'm Jeff McMillan, I'm your MC. So let's talk personalization.
Let's talk personalization.
Given that's your title, What are you doing that's sort of cool in that space? How does it work, and what's the impact?
Main thing for me is probably, and this is nothing new, it is getting omnichannel right. Especially these last few years, getting omnichannel done properly, linking of all of your experiences together, knowing where your customers are and how they interact is just crucial for that customer experience. And I think most customers do expect that from banks, whether they're in a digital experience, whether they're in a branch, in a call center. You need to be able to stitch those all together. And actually bringing in technologies which enable you to do that and do that at scale. I like to joke, I've worked for a bank which is older than America back in the UK, in the Royal Bank of Scotland. I now work for Wells Fargo, which has more customers than the UK has people. So the scale at which we get to operate is amazing. Do not forget that. Do not forget that we are able to touch a significant amount of customers. So ensuring, as I say, omnichannel was our key focus in personalization. And then again, we like to call them next best experiences or next best conversation. The reason we branded it that way internally was to get away from what does the bank want to speak about the customer now. It puts a lens and it puts a focus on us to say, how do we really provide the next best conversation, whether it's to our bankers to engage with this person or if they're in the digital experience. Because again, they are probably trying to achieve something. We are usually getting involved with a journey they've started or that they're interacting with. So for me, I'd say that is the key focus. Personalization is such a broad umbrella term from really the tailoring of that message, the tailoring of that experience, and just getting that right for our customers has been key. So as I say, a large focus on data. To your point earlier, without the data, you can't do this properly. But then obviously stitching that omnichannel experience together.
Yeah, I would add, so we own E-Trade now, and we launched back in February effectively our recommendation engine. Although it's not we don't call them recommendations because they're actually not. They're more conversational, like Tom suggested. That model has 1,200 attributes, right? Things like, do you own socially responsible stocks? What time of day do you come to the website? How frequently do you come to the website? How frequently do you trade? What are you reading? Because what we find is any form of engagement with our organization is positive. Even complaints, actually. If you are engaging with our organization, if you pick up the phone or you come on our website, you are more likely to grow with us than not. So this idea that every time you come into my website, I have to upsell you on a credit card, candidly, that's not how we make our money. We make our money by having you take less money out and having you put more money in. So it's actually not even about selling you a specific product. It's retaining you as a customer. And what we find that retains people's customers is a positive experience. So for example, you may come to our website and we may talk to you about elder care. How many people have parents that are suffering right now, right? That you're thinking about whether you need to put them into a nursing home or not, right? Honestly, like most people are not really focused on the yield curve, right? They care about their kids, their spouses, their parents. And I think the game is shifting to Tom's point, it's not trying to sell them the things that we want to sell them. It's having them, not even having them buy anything, it's having them engage. And I think if you focus on engagement, that's the secret sauce, as opposed to, well, did this IRA offering convert at X% versus Y%? Because ultimately the money is about client acquisition and growth.
And I think that's such a key point, is what KPIs are you going to have moving forward? So what OKRs are you going to set yourself as, whether it's a personalization program, whether it is because we call ours the customer engagement engine, how do you actually measure its performance if you really do move into this next best experience, next best conversation, service-orientated piece? And I think, again, for us, we really do try and focus on that customer. And I think it's key here, and again, going to financial services, it's an interesting industry in that customers don't tend to leave you. It's rare that they really just shut up shop, close their account, and off they go. You've really annoyed them if that's the case. And trust me, no AI is going to bring that back. There's someone has really, to say it nicely, pissed them off. So you rarely get this clean divorce. You just see people less over time. And using those trends, using those engagements to say, okay, there's something wrong here. They're using us less. They're not using this product anymore. What are they doing? How do we actually bring that together and understand the journey to re-engage them positively so that they start re-engaging with our brand, re-engaging with our products? And we want to be that main bank for that
press
customer.
2 for technical
You
support,
can see that
or
transition
press
over time
0
rather
for
than
an
that hard
operator.
cut, which
Press
Just,
pound
just one
to
other
take
comment.
time to repeat
If
these
you're
options.
building, and this is like a very detailed
you.
point, but like, don't
Thank
screw this
you
up,
for
trust
calling
me. If
Actionable
you're building
Intelligence
a
Marketing,
machine
where
learning
we help you
algorithm
perfect your
to
marketing
deliver value
aims.
to a customer, do not use revenue as your dependent variable. Because what's going to happen is you're going to have the machine sell things that make you more money. And when the OCC and the Fed and the SEC come in, they're going to be like, why did you recommend this product, which is getting 120 basis point, versus this one that's getting 6? Why are you recommending mutual fund over an ETF? And I've seen this happen to some of my colleagues. For example, our whole thing is based on net assets. So bringing money in is a vote of confidence to our firm. Taking money out is a vote of negative. And optimize around that, we have found the regulators really are much more comfortable with.
And I'd definitely say as a counter, if for some reason you do use revenue, we don't also, but I'm not going to give you my secret sauce. If you do use revenue, have a counter in there. Can you model the benefit to the customer if they do something? Can you come up with the confidence to say, if a customer does this, this is going to be a benefit to them as well? Have a counter in there. Make sure it's not just making the company, the bank money, but also it benefits the customer at the end of the day as well. You can, if you really start digging into that, different ways of doing it. Do they have less trips to the branch? Do they call less? Can they save time? Can you actually model that and quantify it as well to help there? So I think some good pieces. I'm going to move us on to the next topic, if that's okay, Jeff.
Yep.
In your opinion, what's the most exciting innovation or project that you're seeing, whether it's in your company, elsewhere?
Well, obviously, these propensity models, they just work, right? If you're not using them, you're leaving money on the table. But again, it's a function of data. But I guess what I would say more recently, and I'm not going to mention any vendor names, but for years, conversational AI was nowhere. I mean, it was mediocre at best, generally very poor. And the experiences that we would have with these bots, yeah, maybe they would be deflecting some calls to the call center, but candidly, that's not, at least in our business, it's not like a huge driver of costs relative to. And what I have seen in the last 6 months, right, year, is that the quality of these natural language systems are getting really, really good. And we think about these tools as, I need a duplicate 1099. How do I do that? I need to process X, and the machine comes back with an answer. Imagine, like I work in a business that has financial advisors. Imagine if we could make available to those 15,000 financial advisors every single piece of knowledge that exists at a place like Morgan Stanley, and that they could simply interrogate that question, like using voice or typing, and be able to deliver that knowledge. So I am looking for an extended living facility for my mother who has early stage dementia in the greater New York area. What recommendations do you have for me? And to have the machine be able to deliver that. We think, particularly in an organization that has a competitive advantage in the intellectual capital space, that that's a killer. And I will tell you the technology it's kind of there now. Still some little kinks to work out, but it has massively progressed. And we think the idea of opening up that knowledge in a way that doesn't sit on your intranet site that no one can ever find in 17 PDFs I think it's not going to change our business. It's going to change healthcare and a bunch of others as well. So if you're not looking at this stuff, I would suggest you may want to have a peek.
I think that's a really good example. I'll speak to another bank, actually. So Commonwealth Bank of Australia, if any of you are familiar with the guys down under, actually very advanced in this space. The Australian markets, most of the banks actually perform very well in the personalization, AI from a business perspective. But the Commonwealth Bank of Australia has spent a lot of time working on how do they deliver content due to the recent flooding and fires and all of the natural disasters they've had, unfortunately, down there in the last few years. So I'd highly recommend go and look it up. There's quite a few documents out there on the internet. Go and look at the Commonwealth Bank of Australia and the work they're doing to improve the customer experience. And this is all proactively done by the bank then. They are determining and using their models to say, is something going to happen? So they're not only just doing the modeling on what is happening, they're trying to pre-predict things happening to their customers. I think I read a stat that in the near future, 40% of properties in Queensland are going to be uninsurable because the weather's so dramatic down there in recent years. So they're really using their AI and their customer engagement engine, which they call it as well, to converse with their customers, help them understand the implications, provide these useful knowledge, provide these guides on what they can do next. And I think that is a great example of putting the customer first, but then also further engaging your brand with them to help them out in rough times. So I think that's one.
Yeah, just it's funny you mentioned the weather. So we have a next best X thing as well. And ours does not go direct to clients, it goes direct to financial advisors, and then they curate it. Our highest click-through rate is an email that our financial advisors send 24 hours before a hurricane. So we geolocate it, and basically we say, hey, there's a hurricane, tornado, flood, whatever it is, any natural disaster, and we've gone ahead and curated the 10 things that you need to do to keep you and your family safe, to include how to take care of your pet. Not only has it given us the highest click-through rates, and by the way, financial advisor can click that button and send it to 200 of their clients in that zip code, addressed to that client and in front of the financial advisor, so they just think they sent an email. But not only did it have high click-through rates, but the emails that came back from the clients about, I have Fluffy, she's in her little cage that you told me to get. We're so excited. The weather's coming down, but we're safe. I mean, it was surreal that this bot that we built and these people were responding to their financial advisor who cared to send this thing out to them, and it was value added. And it goes back to the point I made before, like, I'm not selling anybody a bond in the middle of a hurricane, but the fact that their financial advisor took the time to send them this information, literally the most powerful, every metric was through the roof of everything we've ever done, and we've been live since 2018 with the platform.
So this is obviously an interesting one. Let's talk the ethical dilemma that is the data which sits behind all of this. We know we need data to do this well. We obviously have to consume it and use it. So in your opinion, how do we build this effective AI whilst taking this obviously seriously?
So I think first and foremost, and I think most organizations have an independent model review team. If you don't, I think you're going to get yourself in trouble. But so there's a whole team of people that sit outside of my domain. They don't work for me. I don't pay them, who independently validate every single model that we put into production. And bias is, there are techniques, you use softly factors. There are techniques you can buy. There's lots of vendors here, I'm sure, that are selling them, that allow you to, in a 1,200 attribute neural net, allow you to see the contribution. So simply what we do is, in finance, you can't bias any products based on gender, age, sexual orientation, or race. We obviously can't do sexual orientation because that's not in our data set, but the other three you can proxy. And then what we do is we give the models to our independent team, and if there are any factors that are correlated to any of those three factors that I mentioned, and that is skewing, so for example, I'm making this up, let's say women have a higher propensity to log in after hours than men, and that's an attribute that's driving X, we might be targeting based on that. And what the independent review will identify is that factor is actually biasing, and then we have to go, before we actually, so none of our stuff is unsupervised, to be clear. We go through that process, we give it to legal and compliance, they do the review, and they come back and say whether we're good or not. And if we're not, we have to go back and rejigger stuff. And I would just strongly suggest you need independence, and you also need people. The independent group needs to be as smart as your team, because you can't staff that organization with people who don't really understand machine learning at a deep level.
I'll be the we have the similar model risk and governance forums and teams which look after what I do and tell me where I'm if I'm going in the right direction or not. I think just from a business lens, though, thinking about if you are a business individual or with your business partners, there's a few things we like to ask ourselves, like, if this were in a newspaper front page in a few years' time, would we be proud of this, yes or no? Now, these are quite simple questions you can ask yourselves, like, am I doing the right thing? Am I on the right side of creepy? What grey area am I playing in? Like, you should be asking yourselves these, and I think you should be asking your business users understand the data lineage, what's powering them, because it's very easy to say, I want to do this campaign, I want to speak to customers this way, as a business user, but not really know what's happening in the background. So I think there needs to be an overall training and upskilling of every user that does touch these things to know exactly what they're doing. And then also, it's very easy for us to say, the customer's opted in. We have their approval to do this. We have it. It's very easy to play that card. We should be asking ourselves, would a customer be surprised if they knew how I got to this outcome? They shouldn't really. Like, it should be pretty obvious, like, how we've come to that conclusion, where it's come from, how we've done the maths to end up there. So some of these simple questions which the users should be asking themselves, the business users should be thinking about, as well as obviously closely aligned with actual risk, governance, monitoring.
I think you're spot on though with that question about the customer. You know, we get people come to us, they're like, well, we just want to sell more X, and the fundamental question is does the client really want it? Does the client want X? And is the client going to engage in X? And what's nice about these models is they kind of give the voice of the customer very clearly. So instead of me saying nobody likes your thing, I'm able to say, well, look at the model. Like, you're not performing well here. Clients do not receive the thing that you're trying to deliver them positively. Like, go away, right? And having the metrics to sort of empower you to have those conversations, I think is really, it's quite good.
I'm going to move us on to the next topic. We've got two more, and then hopefully we can open for some questions. This is a really interesting one for me. As I say, I manage multiple products on behalf of Wells Fargo. I consider myself more on the business side, although I do have a couple of data science working for me. The rise of technology with built-in AI and built-in machine learning capabilities, especially in the personalization space, has created this interesting discussion point around scale. Right? Undoubtedly, if you gave a data scientist enough time, enough money, and a big enough team, they could probably come up with a better model and a better approach than what is in the vast majority of these technologies, especially in the marketing space. And I think personally, it's an interesting space where it's like scale and speed plays the data science, their knowledge, their expertise. And we actually encounter this a lot with the model risk and governance internal teams, where they'll argue, you can do this better. And the answer is, yes, we know, but not at the speed we need to. So I think it's a really interesting dilemma in which a lot of big companies find themselves at the moment. It's having that discussion and how you best present, I'm using this technology because it achieves the output I need to achieve, but I'm going to make it smarter over time and work with you guys. So it kind of goes back to our first discussion points around big tech. And as you were saying, that second wave coming through where we will actually catch up or maybe speed things up.
Yeah, you know, I would I don't know if everyone did down at Cancun, but you know, like they have those the little Mexican women that paint those beautiful pottery, right? And they do like one pot a day, and they're just gorgeous. I still feel that's kind of how we build models in 2022 to some extent, and I think that this is a huge opportunity. And by the way, there's no vendor, and no disrespect to any vendors in this space, there is no vendor in this marketplace that will give you a complete front-to-back solution for ML ops. It does not exist. Now, I'm sure someone will tell you that they do it, but they don't, okay? And because of that, you're constantly in this world where you're either stitching it together technically, which is super complicated, and you got to figure out which the right tool is, and then they go out of business in 3 months, and you're left holding something, or you put a lot of manual process in place, which is where most companies really are. So I think there's an enormous opportunity to scale the decision scientist capability in a way that allows them to focus almost exclusively on the model creation, as opposed to all the other junk that they have to do today, which is highly inefficient. So you're paying somebody a premier salary, and the truth is 80% of what they're doing is really low-end stuff. But because you haven't separated the production process in a way that it's scalable, you can't separate it out. And I think that the next wave is really creating a repeatable, high-velocity process where instead of taking models that take months to go into production, maybe it's a day, maybe it's an afternoon, and I think that's where we need to go.
I think that's a good point, and I think we kind of work in this hybrid situation whereby we rely on the technology to do the scale, the speed. It launches the conversation or whatever it's launching on our behalf, and then we're working with the data scientists somewhat retrospectively. They'll have been engaged from the beginning, but we know they're going to land their models, their outputs at some point for us to ingest into the tool, and then obviously we can make things smarter as we go along as well. So we've focused heavily on what is the MVP for each launch, what is the MVP for everything we're putting out there, and how do we make it smarter over time, just knowing there is speed to market, there are additional constraints which we just touched on.
Yeah, well, and I'll give you another example. So, a place like Morgan Stanley, how many products do we have? Like 300. In the old world, somebody would build a model for the propensity to buy a liquidity access line. Someone would build a model to figure out how to do, for a structured investment, for mutual funds. I mean, you name it. And what we've moved towards now is one model that supports all products, right? So you basically, and then if you're going to, now I don't need a PhD, by the way, to run the next one. I can run a good master's degree in decision science, and she can go pick that model off the shelf and then leverage it. And that's been a real enhancer. And it also creates quality, and it gets me through this independent review process because they've seen it before, and we're not starting from scratch.
Should we tackle the last one?
Yeah, let's go.
Data governance, everyone's favorite topic just before lunch. Should we go for it? So data governance, as we know, is critically important. What do you think a good data governance strategy looks like?
I would say that the person who runs my data governance function is the most important person in my organization. I think this is the single Achilles heel of every firm, and everybody wants to jump in with their neural nets. And if you don't have a single source of truth that's high quality, that has a group that manages issues with an owner of every single data attribute. I mean, this took me 4 years to get. Like, I come to you and I say, okay, you're going to be the owner for my product reference file. And like, well, I don't own the product data. I just kind of watch it. That's by so-and-so. Then I go to so-and-so. And they're like, well, I don't really own it either. And you circle the organization and nobody wants to own it. And then finally you get them to agree because their boss says they have to agree. And then, by the way, then they don't do it for the first 6 months. And then you got to go back to them and they say, well, and then they're like, well, how do I do it? I don't even know what it means to be an owner. So there's an enormous amount of political capital. And the other thing I would say is that the problem with data is that the cost center that has the problem is not the cost center that created the problem. So you are a product, you're the product owner, and maybe you sit in the bank and somebody from your financial risk reporting team says, your QSIPs for Latin American bonds are coming in incorrectly. I need you to fix that. And they go to the tech guy. They say, well, that's going to cost us $600,000 because we've got to re-architect the whole thing. It's a mess. And they're sitting on a $1.2 million budget. And they're like, you want me to spend $600,000 to fix this problem of this group that I don't even care about? Like, how do I do that? So you've got to have a framework that somebody at the top of the house is able to say, yes, that's the right investment to make. I've been at this for 6 years, and I would say that we're only starting now to get good at it. Hardest thing I've ever done in my entire career, harder than neural nets, because it's all about people and power and accountability.
I'll build on it from a governance kind of in the marketing technologies then and the platforms I run. As I said earlier, we are very lucky to work in this industry. We have so much data available to us. In fact, we got quite selfish, like, give me all of the data. Let's bring it in. I will find a use for it. I think GDPR tried, and I was still back in the UK when GDPR really kicked in. GDPR tried to obviously break that down. Like, we should have had those questions. Do I really need this? Do I have a legitimate reason to have it in the tool set? So that should obviously always be the first question. Why are we bringing it in? What are we using it for? But then I think it's too easy in the technology side to forget about actually purging it, removing it, refreshing it, whatever comes with it. I found a lot of banks and big organizations have actually put a lot of effort into the underlying governance, setting up their architectures, etc. But actually when it ends up in an end system, it kind of gets forgotten about again. And that's a real key part where we just need to make sure those users, those product owners or the business users in those tools are aware of what they should be doing, what they can be held accountable for, really putting a strict governance in place to use it or lose it, as I like to call it, and having a regular cadence in place to be purging, to be refreshing and making sure it's fit for purpose, but also is being used correctly as well. Going back to let's not end up on the wrong side of creepy here. How do we make sure we are on the right side of the fence? So, yeah, I think I would just add that to your bill.
Yeah, I would just say if you want to be educated in the space, there's a guy, Tom Redman, who I've known for 20 years when I first started out in data. And it's funny because he worked at Bell Labs in their data center group, and he's got a PhD in statistics. And literally 20 years ago, he was talking about this stuff, and he was like, I joke with him, he's 20 years ahead of the game. But go look at his book. I mean, I have no financial interest in Tom, but have a look at his book because I think it really speaks to the fundamentals of how you run a good data management function.
We've got 5 minutes left, as I say, before lunch. Hopefully you're all hanging in there. I think should we open up for questions? Has anyone got any questions for us?
Yeah, so how this will work, if you guys are close to the middle mic, you walk up there, or if on this side, I'll just run up to you, but we'll start with this gentleman right here.
Okay, let's bring it. I gotta hold it. Really? Okay. So, yes, hello everyone. This is Amir Kashani. I'm in the manufacturing auto side. But we release a lot of AI products that is going to augment experts. And whenever AI and experts are sort of interfacing, there's a lot of friction of how to deploy, how to kind of like build a culture around augmenting the experts that are doing that. I'm assuming you're going through the same transition. It's not like you don't have any customer interface and you're jumping into sort of machine learning enhanced interface. How do you kind of like build your workforce culture around it? And how do you get feedback from your people of where AI fails and how it should get better?
I think your question, I'm sorry, the volume's not great up here, but I think your question is how do you get organizational buy-in around, the use of machine learning and effectiveness of those? Is that the question?
Pretty much, yeah. If the augmentation, not replacement, is going to happen, how do you go through the adoption of your own operators, which they feel might be threatened by being replaced at some point?
Sure. So first thing I'd say is I'm actually giving a keynote, so I can plug that tomorrow. It's the name of the keynote is Algorithms plus Empathy is the winning combination. The narrative in the marketplace is completely nonsense. I'd use another term, but I'm not going to use that. But it's nonsense. In 2022, yes, if you are we were just talking about this, if you're in a call center maybe or a claims processing center in Mumbai for a healthcare company, your job is at risk. But for the business that I work in, I mean, I got 15,000 financial advisors, and the way we sold our next best tool was I said to them, first of all, you know better than I do. So I'm going to give you a tool that's really smart, that's going to walk around with you every day, it's going to know every customer's needs, and it's going to prompt you. And then you can decide whether you want to send those ideas. And by the way, they even type the email for you, send it, and they measure whether the client actually calls back. And they're constantly throughout the day telling you, do you want this resource? It has access to all the intellectual capital of the firm. Do you want this resource? And they're like, as long as they're in control, right, they're better. And that's how you get buy-in. You make people's jobs better, right? As opposed to saying, well, I'm going to come here, I'm going to take 30 people out. Like, that's not the question. The question is, how do you make smart people better with technology? And if you do that, you'll be a hero.
I was literally going to say pretty much the same thing. That's the honest answer. I think for some individuals, you have to identify, is this going to make them better? Their job may change, but will they get to use it? Will it make their job better? I think for frontline, branch staff, whoever, if you are powering their systems, it was really around actually the education to say, again, solve the customer's problem first, usually. Then you can interact with this tool set, have this next best conversation with them. But your feedback then, the disposition you provide, is actually what's going back into the models and helping train it. So really having them understand, like, okay, this is actually listening to me. This is, still using my expertise to say, this was good. I didn't have this because why? I refused to have this discussion. Maybe they just shouted at me or it wasn't going very well. we were taking that feedback, but we were making it clear to them like that this is how it's going to help train the model. So we actually spent a lot of time in our materials, our training materials, our frontline rollout plan, really focusing on that. So making sure they're aware that they actually are a part of this, like use it and it will improve, but we are listening to you at the same time.
Just a little follow-up. So my question was more in like getting over the resistance. I agree with you, obviously. Like their messaging is always like we are augmenting your skills and make you better. But on the same line, do you also as a process of measuring the bias of your AI, measuring the bias of those 1,500 people as a baseline? Because AI is eventually kind of like, is being compared against the people's performance, or it should be. Is there any benchmark there in financial sector to track that?
I mean, not that I'll share with you, but I will tell you that, and again, come to my speech tomorrow because I actually have some data. I do have data on this, that what we show is that if the algorithm does X and the human does Y, sometimes the human does better than the algorithm, and sometimes the algorithm does better than the human. This is true, by the way, this is true with like radiology as well. I have a friend that's a radiologist. But when the human and the AI come together, it's like 3x, right? You get an accelerating effect. So you don't just get a plus, you get this sort of increased efficiency. And I have 100 examples. I'm not going to share the data specifically, but I have 100 examples where machine plus human beats machine only, beats person only. It's just, at this point, it's a fact.
Maybe you got time for one more question if anyone has another question.